Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Robinhood markets.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. For the longest time, the whole story around this company was just volatility, growth at all costs, burning cash.
Right. The meme stockbroker.
Exactly. But that narrative has fundamentally changed. We're at a real inflection point now, a pivot from just chasing users to, massive profitable scaling.
And you can really see that pivot in the numbers, can't you? I mean, the Q3 2025 performance, it wasn't just good, it was genuinely shocking.
Shocking is the right word. Revenue hit about $1.27 billion, but the real story, the stunner, was net income.
Up over 100% year over year.
And the earnings per share, it came in around 61 cents. The consensus estimates weren't even close. This wasn't a small beat. It was a total demolition of expectations.
So the big question for anyone listening is, why? Why now? What's the mechanism that suddenly allowed them to turn all that revenue into such a huge profit surge?
It all comes down to one key concept: operating leverage.
Okay, break that down for us.
Think about it like this. They've already built the expensive part, the app, the infrastructure, the compliance. So now adding one more customer costs them next to nothing.
So all that money they spent acquiring millions of users during the fee wars is finally paying off. They're milking the base.
Precisely. And you see the proof right in the margins. Their net margin is now sitting at a really robust 52%.
Wow.
And look at the difference between profit growth and cost growth. Adjusted EBITDA is up, somewhere between 82 and 90%. But their operating expenses
barely moved.
Growing at a snail's pace, only 6 to 21%. When your profits are growing 4 times faster than your costs, you've found the holy grail of scaling.
That's a powerful story, but a growth story is only as good as the balance sheet behind it. Are they swimming in debt to make this happen?
Not at all. It's a fortress. They have incredible financial flexibility. We're talking $4.2 billion in cash and, critically, zero traditional debt.
That much cash gives them a ton of options.
It does. And they're using it to signal confidence. The board just upped the share buyback program by another $500 million.
So that's a $1.5 billion authorization in total. Management is basically saying they think their own stock is a bargain.
That's exactly what it says. Yeah. Now, to keep this going, we have to look at where the revenue is actually coming from.
Right, the engines.
The two big ones are options and crypto. That's where the high-velocity, high-margin action is.
And those numbers were just massive in Q3.
They were. Total transaction revenue was $730 million. Options brought in about $304 million, but the real explosion was crypto.
That was the 300% number, right, up to $268 million.
Yeah, which just shows how much this stock is a levered play on the crypto market itself.
Okay, but let's pause there. That's a key risk, isn't it? If crypto and options are the big drivers, that revenue is super cyclical. What happens in a crypto winter? How do they hedge against that volatility?
That's the crucial question, and it leads right into how they're building their competitive moat. They're doing it in two main ways. First, strategic acquisitions and product velocity.
Okay, so buying growth.
Right. We saw them spend about $175 million on trade PMR. That's a move to get into wealth management, to go up market, and attract more sophisticated, stickier clients.
And then there was the Bitstamp deal.
For $224 million, yeah. And that one is a pure international crypto play. It gives them all the regulatory licenses they need to expand globally fast.
So they're buying new markets? But what about building their own tech? The CEO has been very vocal about innovation.
He has. He called the launch of tokenization the biggest innovation our industry has seen in the past decade.
So what does that actually mean for the listener, tokenization?
It's about putting traditional assets, like, say, a piece of real estate or a private equity fund, onto the blockchain. It could cut out a ton of middlemen and make finance way more efficient.
So they want to be the infrastructure for the future, not just a trading app.
Exactly. It's a huge long-term bet. But even their newer, smaller products are hitting big. Those prediction markets they launched, already contributing an estimated $115 million in annualized revenue.
That's impressive speed. And it all works because they have the user base to scale it to.
They have that critical mass, 26.5 million funded customers. But the really important metric, the one that hedges against that cyclical risk we mentioned, is subscriptions.
Robinhood Gold.
Yep. Subscribers are up 76% year over year to 3.5 million people. That's high-quality recurring revenue that's not tied to trading volume. It's sticky.
That makes perfect sense. So you have the high-octane trading engine and the steady recurring subscription engine. Okay, so fundamentals look great. The narrative has shifted. What are the technicals telling us?
The technical picture is very strong. I mean, the stock is in a powerful bullish uptrend, trading well above both its 50-day and 200-day moving averages. Classic signs of momentum.
And are there key price levels we should be watching?
Yeah, the support level has been holding really firm in that $110 and $50 zone. That's the floor right now. On the upside, the big test is around $145. A clean break above that could bring in a lot of new money.
Okay, so strong fundamentals, bullish chart. But here's the thing that gives people pause. The insider selling.
It's a huge disconnect, and you have to address it. You see this amazing story, and then in November 2025, you see a bunch of senior executives and directors selling shares.
Right. People see names like Quirk, Rubenstein, Gallagher selling stock at up to $146, and they think, if the insiders are getting out, why should I get in?
The fair question, but context here is everything. Most of these sales are happening through what's called a 10b5-1 plan.
Can you explain what that is, why it matters?
Sure. A 10b5-1 is a pre-scheduled automated selling plan. Executives set them up months in advance to diversify their holdings because so much of their wealth is tied up in company stock.
So it's not a sudden, we've lost faith moment. It's more like pre-planned financial housekeeping after a huge run-up in the stock.
That's how the institutions are reading it. And you know that because while the insiders were selling, the big money was buying.
Accumulating.
Broadly, yeah. We're seeing firms like Pinnacle Wealth, Nordea Investment, Ritholtz Wealth either starting new positions or adding aggressively to existing ones.
So the professional investors are looking past the insider sales, seeing them as noise, and using any dips as a chance to buy in for the long term.
That seems to be the dynamic. They're betting on the profitable, mature technology platform story.
Okay, let's look ahead then. What are the near-term catalysts that could move the stock?
The big one on the calendar is the Q4 2025 earnings release. That's coming in early February 2026. The market is expecting another great report. Any disappointment there would be punished.
And what about events outside of the company itself?
There are a couple. In early January, you have the big ETF rebalancing event. That can cause a lot of volume and volatility.
Just funds having to adjust their holdings.
Right. And then in mid-February, the institutional 13F filings come out. That's when we'll see exactly which big hedge funds were doing all that buying we just talked about. A big name showing up could spark another rally.
So that's the bull case. We have to talk about the risks because buying this story at this price is not without them. Let's start with valuation.
It's the primary risk, for sure. The stock trades at a very high PE ratio, somewhere in the 49 to 55 times earnings range. That's a premium price tag.
It's like you're paying for perfection.
You are. That valuation assumes the 100% growth continues. If that growth slows down to, say, 25 or 30%, the stock could get hit with what's called multiple compression.
Meaning the market stops paying such a high price for its earnings.
Exactly. Even if the business is still healthy, the stock price could fall and fall hard.
So what's the second major risk that could cause that kind of slowdown?
It's the revenue volatility we touched on earlier. So much of this incredible performance came from crypto and options. If the crypto market turns south, those revenues could dry up very, very quickly.
And there's also a big regulatory cloud hanging over the whole business model, right? Payment for order flow?
Always. PFOF is the mechanism that lets them offer free trading. It's how they make a lot of their money.
By routing customer orders to high-speed trading firms.
Correct. And regulators in Washington are constantly scrutinizing it. Any move to restrict or ban PFOF would be a direct hit to their margins and would force a major change to their business model.
Which makes their push into subscriptions and wealth management that much more important. It's a way to diversify away from that specific risk. It's absolutely vital. It's not just about finding new growth. It's about building a more resilient, defensible business for the long term. So to wrap it all up, the story here is a battle between its past as a volatile meme stock platform and its future as a profitable, sophisticated financial tech company. It seems they've achieved that profitable scale, and they're building a real moat with things like tokenization and subscriptions. Buying the stock today is really a bet that they can keep that momentum going and navigate the crypto cycles and regulatory risks.
And the question you have to ask yourself is this. Have they truly shed their volatile past, or is this explosive quarter simply a snapshot of a cyclical peak? That's the challenge that defines the investment thesis moving forward. If you found this breakdown of Robinhood markets useful, remember to subscribe, like, and comment below to keep getting the best stock analysis delivered daily.